Welcome to another S&P 500 analysis. Today is June 18, 2022. This week, the Fed showed some conviction and commitment on controlling inflation. It hiked the interest rate by 75 basis points after Jay Powell said from the last meeting that 75 basis points is off the table. But of course, it did leave an opening by using the qualifier for now. And I, for one, said that the Fed will need to do 75 or even 100 basis points to show the market it is serious about fighting inflation. And here I tweeted out saying that the market will welcome a higher rate hike. And after the Fed have shown it is serious about getting inflation under control, then the market will focus on how deep the recession will be. And here are a couple of my tweets after the Fed announced a 75 basis point hike. I reiterate what the market will likely to be focused on next, and that is how bad the recession will be. And I also tweeted out on where the E-mini S&P 500 future might be headed after the rate hike announcement reactions. So is the S&P 500 going lower, or is it an attempt to establish a bottom? In this video, we'll look at the market sentiment, the internals, and the price action of the S&P 500 along with the other major market indexes and see what they are telling us. Stay tuned. And before I begin, I need you to smash the thumbs up to help me promote this video on YouTube. And if you are looking for an unbiased objective view of the market, then click on the subscribe to subscribe to this channel, and be sure to click on the notification icon to turn on notification so you won't miss any of my future videos. In addition, be sure to watch my trade ideas video that I post throughout the week to see what I'm watching and how I analyze the price action for potential trades. Looking at this weekly chart of the S&P 500, we see the range last week was a little bit over 201 points, and it lost 226 points or 5.79%. Notice it gapped down from this weekly evening star pattern, and it also closed under this declining 10-week and also the 40-week moving average. And also it made a lower low. It also could be sitting on this potential declining price channel at the lower trend line of this price channel. We're going to take a more detailed look at the price action of the S&P 500 later after we have reviewed the market sentiment and the market internals. But as it stands right now, technically, the weekly trend is still down. Let's start looking at this intraday chart here on the S&P 500 and some of the internals. What I want to show is this up-down volume ratio here, and this is Monday. You can see on Monday, this time frame, shortly after 11 o'clock Eastern time, the up-down volume ratio is almost 99-1 in favor of the downside. That means almost every trade that occurred during that time period was on a downtick. So that's pretty bad, right? I mean, it's almost 100%. It's downtick when you see 99-1. And in addition, you also notice that the advanced decline throughout the day was over close to 3,000 more declining issue than advancing issue. Now, be reminded that there's only a little bit over 3,400 or 3,400 stock traded in the New York Stock Exchange. So when you have close to 3,000 of them or in decline, and then the other 400 of them is split between advancing issue and declining issue and unchanged. So assuming there's no stock is unchanged, so split that another 400 in half to the advancing side and half to the declining side, then you're talking about 3,200 versus 200 in favor of the declining stock. So that is also pretty bad. And also looking at the new high, new low, over 800 stock make new 52-week low than the number of stock making new 52-week high. So Monday is a pretty bad day, I would say. Right? We see 99-1 in favor of the down volume, and close to 3,000 stock on the downside, well, more than 3,000, 3,200 out of 3,400 stock is on the decline. And we're seeing 800 more stock making new 52-week low than a new 52-week high, the number of stock making new 52-week high. Now, then on Wednesday, we see a little bit of an uptick, and that is when the Fed made an announcement of 75 basis point hike, and we see that we got a little bit of a rally going. Then before the close, it seems to be have petered out and gave back most of the gain. Then on Thursday, we saw a follow through on the downside. Remember earlier I put out the tweak, show you that I believe the market basically are looking for some conviction and commitment from the Fed. It is serious about fighting, getting inflation under control. Then after the market get that commitment from the Fed, then it will focus on, well, how bad of a mistake did the Fed make in terms of their monetary policy to cause a recession, and how bad the recession gonna be. So right now the market is basically doing a little bit of an assessment and try to get a gauge of how bad the recession will be, and we won't know until not next week, the week following that we'll get the GDP reading. Then we will probably get some idea of how the market will start pricing in for the impending recession, because I think there's still some people thinking that we're going to get a soft landing. There's no way we're going to get a soft landing. We will very likely get a recession. It's just a matter of how bad will it get. Now let's take a look at this sentiment. Here we see that the VIX closed at 31.13 on Friday. As you can see, throughout the week, we're pretty much above that 30 level. And it actually got a high as 34 on Monday. It was sitting at 34.02. And also in addition to that, the put-call ratio was also above 1. And on Monday, it was actually sitting at 1.26. And today, on Friday, when it closed, it actually came back down below the 1.0 mark, and it closed at 0.96. But still, all in all, you can see that the market participants are still very fearful, and also they are quite bearish right now. So looking at the up-down volume ratio here on a daily basis here, you can see that on Thursday, we also had a sell-off, quite a dramatic sell-off on Thursday after the, basically the post-Fed announcement, interest rate announcement, but it never got down to that 99 to 1. Right? So we basically got down to close to, I think the low extreme for that day was somewhere around 65 to 1 on the negative side in favor of the down volume. But we finished the day at somewhere around 14 to 1 in favor of the downside. But the advanced decline, the declining issue was close to 2,700 more declining stock than advancing stocks. We got close to the Monday mark, somewhere down at the 2,900 more declining issue than advancing issue. And here in the New York Stock Exchange, new high, new low, we did see the number of stock making a new 52-week low, came up again over 1,000 level. On Thursday, we actually saw over 1,099. So that's quite a few. The previous week we saw, over 1,000 as well, but wasn't up at that 1,099 level. So actually, Thursday was much worse than the prior extreme here a couple of weeks ago. So definitely, we're showing there are a lot of stock making new 52-week low. And in addition to that, we're also seeing the cumulative AD line making a lower low, along with the SP 500 closing at a lower low. And for the Nasdaq market, we also saw the up-down volume ratio is also went a little bit more negative this week as well on Monday, and it closed close to 6 to 1 in favor of the downside. And the number of declining issue outnumbered the advancing issue on Monday by 3,634. And also on Thursday, it got slightly better, but it's not that much better. The declining issue outnumbered the advancing issue by 2,994. And also the up-down volume ratio was 3 to 1 in favor of the down volume. And for the Nasdaq new high, new low, it actually a little bit better than the New York Stock Exchange. Remember, we saw the New York Stock Exchange actually went above the previous extreme, the previous high that was made a couple weeks ago. It went to 1,099. But in the Nasdaq, the extreme down here a couple weeks ago was somewhere around 1,690, and here is 1,688. And if you could see on Monday, it was 1,101, and on Thursday sell-off it was 1,129. A little bit improvement from the comparing to the New York Stock Exchange, and also the number of issue making a new 52-week low. On Thursday, it was only 1,143 compared to a couple weeks ago. I think the high was 1,711. That made new 52-week low. And similarly to the New York Stock Exchange, the Nasdaq market, the cumulative AD line, also made a new lower low, along with the Nasdaq 100 closed with a lower low. So from the sentiment and also the internal, we did see a little bit more capitulation early in the week, and then we see a little bit continued weakness after the post-Fed announcement. So right now, I think the market participant are getting a little bit more fearful and more bearish, and also the market as a whole is trying to price in, how deep the recession might be. And right now, there's probably not enough data to make a accurate assessment, and that's why we are seeing a lot of, volatility to try to assess. Now let's take a look at the price action of the S&P 500 in a little bit more detail here. Basically, looking at it on a weekly chart, here you can see that I have thrown in this price channel here. And that's just a potential price channel because basically I'm just trying to connect to some of these lower pivot. And right now we're essentially seeing there's a weekly gap here. And if we do get a bounce, we could see maybe it would come up to this 4,000 level here. Now the S&P 500 is still in a bear market. It closed down, 23.74% from its all-time high up here. So that officially put the S&P 500 in a bear market. And also in addition to that, remember I put in a little bit of a major move based on this Fibonacci retracement, and essentially looking at these extension here, this 127 and 141 and 1618. So you can see right now, it could be, if it break this channel or this trend line here, could come down to this 127, and that would be somewhere around 35, 36. And that is also in confluence with this 50% retracement near the 3505. And that's based on this particular swing here. So right now, we're essentially watching to see would we be getting a bounce next week and possibly close this gap here, and maybe come up and test this 4,000 level, and then maybe if we zoom back down, then we see it, would it be able to hold this 50% retracement level. Now I do also have a pivot high here, which is sitting at somewhere around 3393.52, and that is the pre-pandemic crash pivot high. All right, so we basically are looking for the possibility of the S&P 500 eventually come down and tag this pivot high. I'm going to show you later on, there's some of the indexes is already have gone beyond this pandemic pivot here, this pre-pandemic pivot high here. So basically right now we are looking at the possible, maybe a little bit of a bounce, a dead cat bounce, and see if we'll get a gap fill next week on the S&P 500. And if it come down, then we're basically looking at this 3,500 on the downside. And here looking at the Nasdaq 100, also drew in a little bit of a price channel to see would be able to connect these pivot low here. So next week, if we see a little bit of a bounce from the Nasdaq 100, maybe we'll see it bounce back up here to this 12,100 near the 127 extension here. Because I also have this Fibonacci retracement and basically extended down here right now, if it continue to drop, we basically are looking for the possibility of it coming down to this 1618 extension somewhere near the 10,706 or near this in confluence with this 618 10,589, and that's based on this particular swing here. So that would be on the downside, target that we be watching for the coming week. And then the upside is basically this zone here, and these are some of the prior pivot support here. Okay, and that would be somewhere around 12,100. Now, looking at the Russell 2000, the first thing that I want to point out is here is the pre-pandemic pivot high here. And right here is also in confluence with this 50% retracement level on this Fibonacci retracement. Yeah, 1712.60. And you can see last week it closed below that. It closed at 1665.70. So it closed below this pre-pandemic pivot high, and it tagged this 414 extension here. Essentially, this is the Fibonacci retracement with this extension coming down to this 141. And right now, if it breaks below this 141, then I'll be looking at this 1618 somewhere around at 1,545, and also in confluence with this 618 retracement at 1,536. Now for the upside, we're basically looking for the possibility of this gap fill here in the coming week and see would it be able to get back above this 1,800 level. But seems like right now we might get a little bit of a bounce, but might not completely fill the gap. We could bounce back up to the 1741 area and probably will reverse back down. So we'll see. Anything is possible. But right now, it's definitely still in a bear market. Been down more than 32% from its all-time high here. And here on the Dow Jones Transportation, it's basically still coming down here after it broke this 382 retracement. And right now, we're basically looking for it to possibly come down to this 50% retracement level somewhere near the 12,363. And if we could get a bounce, then maybe it could come back up and retest this 13,752 and possibly come up to these pivot low zone here near the 14,000 level. And here's the Dow Jones Industrial. As you can see, the Dow Jones Industrial is still not officially in a bear market because it only been down 19.17% from its all-time high. But look how closely it is getting close to this pre-pandemic pivot high here near this 29,568. It is sitting here at this 382 retracement at 29,794, and it closed the week at 29,888. So we'll keep an eye on it. There is a little bit of a gap here. We could see a little bit of a bounce and possibly maybe come up and fill this gap and back test this 32,000. But it appears that it's going to break down to this, at least to this 272 extension down here at 28,917. And that would basically come down and fill this gap here and also dip below the pivot high, pre-pandemic pivot high here. So keep an eye on that, and I wouldn't be surprised that we could eventually see this 50% retracement level get tagged down here at 27,582 and pushes the Dow Jones Industrial officially into a bear market. Now look at the New York Stock Exchange Composite Index. Remember I was talking about the all-time high that it made by itself back in January timeframe. And it appeared to be one of the strongest index. But right now, you look at it, it seems to have reversed its fortune here. It actually dipped below the pre-pandemic pivot high here. And you can see it dip down to this 382 extension. This 382 retracement at 14,089. It closed the week at 14,097 here. And right now, it's sitting right on the near the 32.8 retracement. So for the coming week, I'll be watching to see what it continue to push below and come down and basically tag some of these extension here, and that is based on this particular Fibonacci retracement coming down. So we won't be surprised to eventually see the 618 get tagged, and that would be in confluence with this 50% retracement near the 13,000 level. Looking at the 10-year yield, we see that the yield came up close to 3.5. The high was 3.483. So after the Fed hiked the rate by 75 basis points, we see a yield came up and backed off. And right now it's sitting at 32.39. It did came up to a level that we have not seen back in April 2011. So right now we probably will see it maybe chop around at this 3.2, 3.5 area for a while before it move up to possibly this 3.75 area. Look at the US dollar here. This is the US dollar future DX, and you can see that it tried to get up here to this 106 level and then pull back. I'm still looking for this to come up and tag this trend line here, although we might get a little bit of a pullback in the near term, but I believe that this will likely come up to this 107 somewhere up there before it reverses back down. And look at crude oil here. We see finally get a pullback for the week here, and came back down to 109.56 for the week. But I still believe oil will come back up, take out this high at 126.26, and eventually get above this 130 level before it correct itself and pull back down. So we'll keep an eye on it. It could maybe pull back to near this 101 level and then push back up. Silver came down and tested the $20.42 level. It seems to be holding above that. So I'm just kind of keeping an eye to see what it get back above this 22.72 level here. And if it seems to be holding this this level of support quite well here. So we'll see. I mean, it could come down, make it a little bit of a double bottom here, near-term double bottom, and then pushes up. And also for gold, gold pulled back a little bit, also almost got back down and tested this trend line. And once again, came back down to this 1804 level, but before it get a bounce and close near the 1840. So I'm still looking at gold to make another run higher, as long as it holds this trend line. If it breaks this trend line, then we're basically looking for this thing to come back down to somewhere around the 1700 level. But for now, just kind of keep an eye on this, see would it be able to hold above this trend line, stay above this 1850, 1840 level. So in summary, the market could be starting to price in a recession. It will likely be volatile until it see a few more negative GDP numbers before it could settle down on a level. The market participants are still quite fearful, but not at a panic level yet. They are getting more bearish. The up-down volume ratio is telling us there has been some capitulation taking place. All the major market indexes except the Dow Jones Industrial and the New York Stock Exchange Composite are officially in a bear market. We could see another short-term bounce next week, but watch that pre-pandemic pivot high level for all the indexes. Right now, the Russell 2000 and the New York Stock Exchange Composite have came down and tested that level. This is one key level we could see all the indexes will eventually test. So right now the trend is down. I wouldn't be buying the dip unless there is a strong intermediate term macro narrative to support it. There will be a couple home sale report coming out next week. Watch the home builders. With rising mortgage rate, home sale in the coming month will likely be disappointed. And if you are wondering what happened to my analysis for the SPY, QQQ, and IWM, I will put it on a separate video where I will also cover Apple, Tesla, and also maybe some other stocks. So keep an eye out for this video. But be sure to smash the thumbs up to help me promote this video on YouTube. Thank you for watching and stay safe.